Jarrad Brown, financial planner to Australian expats in Singapore and around the world. Welcome to my video series where we cover the personal finance basics for Australians at home and abroad. Today, I'm thrilled to have with me Managing Director of CST Tax, Boon. Boon provides both personal and corporate income tax to our clients, both in Singapore and Australia. It's been an incredible resource for our clients, and I'm thrilled to have him with us here today to cover some of the common questions that our Australian expat clients face.
Thanks for having me, Jarrad.
Thank you for joining us. So Ben, as a starting point, perhaps you can just give us a bit of an overview of the Singapore tax system for individuals, how it works, what do people need to be aware of?
Sure. So the Singapore tax system is a little bit different to perhaps what us as Aussies would be used to. The system is a territorial system, which means that only income sourced in Singapore is taxable in Singapore. The term sourcing means things such as employment income, bank interest, dividend from Singapore companies, that's sourcing. So only that type of income is taxable in Singapore as a tax resident of Singapore. So you can have, as a lot of our clients do, an investment property back in Australia generating income. That income is not taxable in Singapore, even if you bring the money into Singapore. And that applies to foreign income from anywhere around the world.
Okay, that makes sense. Now, as far as actually paying your tax, how does it work? In Australia, we obviously get our notice of assessment, we start paying our tax online. How does it work in Singapore? What do we do when we get our notice? How do we actually start paying tax?
Good question. Another very different approach here in Singapore is the fact that there's no pay-as-you-go withholding system. So your salary, if you're an employee, will be a gross salary, and it's going to be up to you at the end of the year to file your return to determine your tax liability and then to fund that. So a lot of people need to be careful that, although you get $1, just be mindful that that dollar hasn't had any tax paid on it yet. There's a couple of options. Once you get your notice of assessment, you can either pay a lump sum or you can enter what's called a gyro repayment plan. And that is basically a direct debit from your bank account taken every month by RS over a span of between 8 to 10 months. So it becomes, if you like, a quasi pay-as-you-go, but it's always in arrears. So you're paying a monthly installment based on your last tax return. And that is, funny enough, interest-free as well. So something that's quite unusual again for us Aussies who are used to a system where you pay a lump sum, or if you pay over time, there's interest charged.
Okay, so it sounds like Singapore's placing a lot of responsibility on the individual to actually make sure that they're saving for their tax bill when it arrives.
Absolutely, yeah. So one of the things that we do a lot of for people who have just arrived in Singapore is to actually do a cash flow program and looking at, okay, so what kind of income levels are you going to have? What expenses would you have, depending on rent, family, living expenses, and then working out, okay, so your estimated tax liability is going to be X, so think about putting away a certain amount every month. And a good option is setting up a second bank account and just doing a transfer into a savings account.
Okay. Now I understand that the tax year is also different in Singapore to Australia. Could you just walk us through the dates and how that works?
Yeah, so the tax year in Singapore follows a calendar year for individuals. So 31 December is the end of the financial year. You will get your report on your earnings from your employer by the 1st of March every year. And then your tax return will be due on the 15th of April the following year. So 31 December, for example, 31 December 2019 year end, your tax return will be due 15th of April 2020.
Okay. So Ben, can you tell us a little bit about the income tax deductions available here? What can I as an individual claim or look to reduce my taxable income with?
That's a good question. As you and I both know, in Australia, if you incur an expense for work purposes, it's generally deductible. So we're used to things like car expenses, telephone, mobile bills. In Singapore, because it's such a simplified system and the rate of tax is low, the deductions are actually limited for an employee. And quite often, the tax authorities take a view that if you're incurring an expense for work purposes, your employer should actually be reimbursing you, so we're not going to give you a deduction. Having said that, your tax liability can be reduced with things called rebates and offsets. And some common ones that are applicable to expats are your spouse rebate. So if you have a spouse who is non-working in Singapore, so someone on a dependent pass, for example, and as long as they're not earning more than $4,000 from worldwide sources, you can claim a rebate of $2,000. So a rebate will basically reduce your taxable income. Okay. In addition to that, another common one is the child rebate. So each child aged below the age of 16, you can claim a $4,000 rebate. Now the key or the interesting part here is that your child can be, by birth, could be a stepchild, could be someone adopted, okay? And they don't need to actually be physically living in Singapore. So often you'll have families who mum and dad move up to Singapore to work, but the one or two children remain in Australia at boarding school. Just because they're there, you're still eligible to claim 2 lots of the $4,000 rebate for each child. Another interesting one that a lot of people aren't aware of is life insurance. So in Australia, we can't claim life insurance policy deductions against our taxable income. In Singapore, you can actually claim either the actual premium amount or $5,000, whichever is less. The only key requirement there is that your insurance underwriter, providing you the life insurance cover, must have some presence in Singapore. So if you think about some of the global insurance companies, think about whether they have a presence here in Singapore and are selling life insurance here in Singapore. If that's the case with your policy, you're able to claim the premium and reduce your taxable income. Now again, it doesn't need to be a Singapore-based premium. So you can have a premium in Australia, in Australia where you're paying the premium from Australia, you can still make that deduction here in Singapore.
Okay, great. So when people are actually looking at their life insurance, their personal protection, not only should they be looking at are they actually covered offshore, but also looking at is it actually tax deductible?
Absolutely, yeah.
Factoring that in. Okay,
definitely, definitely.
So one of the, common strategies amongst a lot of our clients being Australian expats, we all love to pay as little tax as possible. And one of the common questions we get asked is the Supplementary Retirement Scheme, the SRS system.
Yeah.
Could you just tell us a little bit about it, just broadly, how it works and how do people actually find out a bit more?
Generally, the SRS scheme is a retirement scheme where you can make contributions from your gross salary or income into a specific account, segregated, which is where you can earn income on that capital and not get taxed. To set up an account, there's only 3 providers in the market, and they're the 3 major banks, UOB, DBS, OCBC. Now there are some specific rules around withdrawal elements, and there are taxable issues to consider. So whilst it is an opportunity to claim a deduction for contributions, and be mindful that there is a cap on the level of deductions every year, which is revised by the tax office, you need to really consider the long-term strategy with view of how long might you be in Singapore, because there are penalties for withdrawal from the SRS at certain points in time.
Okay, so it certainly sounds like something that it's not a one-size-fits-all. People need to do their homework.
No, absolutely not. Yeah.
Okay. Now, so with the SRS contributions that people are making, they can claim the deduction. What can they actually do with that money? Can they invest it? Does it need to go into a bank account? What are their options?
Yeah, so that bank account which is set up for their contributions is specifically there for investments and to generate growth and income. Because the idea is that when you hit your retirement age, you are then able to use that to fund your retirement. So all that income and capital accumulating in there is tax-free.
Okay, excellent. And one of the common scenarios that our clients face, they're in Singapore, a lot of them are in regional roles, which means a lot of travel to various parts of Asia and all over the world. And a lot of them are travelling for large chunks of the year.
Mm-hmm.
So one of the common questions we get asked is this NOR scheme.
Yeah.
Could you just tell us a little bit more about it? What is it? How does it work?
Got it.
What does it mean for an individual, an Australian expat here in Singapore?
Absolutely. So NOR stands for the Not Ordinarily Resident Scheme, and it's a concession provided by the Singapore government to attract companies to set up regional hubs in Singapore and to attract overseas talent to base themselves here. Under the NOR scheme, the concession is if you have taxable income of at least $160,000 and are outside of Singapore for at least 90 days during the year for work, then in the first 5 years that you are a Singapore tax resident, you are able to pro-rata your taxable income based on actually the days that you're in Singapore. So for example, if you travel for 100 days in the year, then those 100 days, if you are eligible for the NOR scheme, will actually be exempt from tax in Singapore. Now I think it's very important to make it clear that whilst it's not taxable in Singapore, that doesn't automatically mean it's taxable somewhere else in the world. For example, the place that I've gone to work. This is actually a concession for Singaporean tax residents, so it doesn't change your tax residency status. It doesn't mean that it's taxable in the other jurisdiction. It's just a concession and a benefit for you that the government introduced to encourage you to live and work here in Singapore.
Okay, that's great. So someone, say, travelling potentially a third of the year could actually have a fairly significant saving in their tax bill on what is ordinarily a fairly low rate anyway,
Yeah.
but still make a meaningful difference.
Absolutely. So the top tax rate is 22% in Singapore. If you are a very high earning executive traveling around the world and like you said, you 1/3 of your time is outside, then you think about your effective rate of tax would drop significantly from 22% downwards. Now there is a cap on that rate. You can't drop below 10%. So if you travel enough such that your rate falls below 10%, it will automatically cap itself at 10%, which is still a fantastic result if you're at that higher income level.
Absolutely. So certainly something worth people looking into.
Absolutely. Now, to claim the NOR scheme, the most important thing to remember is that the claim must be made at the same time that you lodge your return. It's only available, as I said, it's only available for the first 5 years that you are a resident in Singapore, and it's very much a use it or lose it situation. So I've met a number of expats here who, as you said, have heard on the grapevine about the NOR, but not really looked into it, and they've come maybe in year 2. Oh, last year, I travelled 120 days last year. Can we go back and amend? Unfortunately, you can't, because it is very much a use it or lose it. You cannot amend your return for an NOR claim.
Okay, that makes sense. Now I've heard, again through the grapevine, that there are some changes announced in the latest budget when it comes to the NOR scheme, how long it's going to be valid for. So what do people need to actually consider and think about when they're applying?
Yeah, so the key change to the NOR scheme is that in this year's budget, it was announced that this current year, so the year ended 31 December 2019, will be the last year that you can enter the system. So that means you must enter the system by making a claim for the NOR scheme this year. And if you do that this year, you have the benefit of the next 5 years, assuming that this is your first year in Singapore. Now, if you're already been in Singapore for the past 2 years, then entering it this year will mean you've got 2 more years because it's only your first 5 years. If, unfortunately, you don't meet the qualifications to claim the NOR scheme, then you actually cannot benefit from that exemption because you need to enter it in this year. Which means that when you file your return in April 2020, you will be submitting a NOR application.
Got it. So anyone travelling quite extensively with their work should really be getting onto this fairly quickly.
Absolutely. And the key point is to just note the number of days that you're outside for work, and a key one will be, and let's remember or be mindful of the fact that if you're traveling to multiple cities, sometimes you're going across the span of a weekend, that is still travel for work. The only time that it won't count is if you're on annual leave.
Got it. So then for new Australians moving into Singapore, so brand new, offshore, first time as an expat, or potentially they've been elsewhere around the world, what are, I guess, the top 3 action items that they should think about as soon as they can when they arrive?
Yeah, so the first one is, as I said earlier on, because it's a gross tax system and there's no withholding, be very mindful of the fact that you need to save for tax. So thinking about really planning your cash flow, how much do I need to save, how much do I need to put aside for my tax going forward. The second one is to be aware of the deductions that you can claim and think about what kind of receipts and things like that you need to maintain, and where you're not sure, getting some guidance and asking around, probably asking a specialist to clarify things. And then the third one is, especially this year, given that it is the end of the NOR scheme, being mindful of whether you're going to qualify for those 90 days or not. Generally, that is the hardest bit that a lot of people are going to come across, is will I actually travel more than 90 days during the year?
So then that has been really helpful, thank you. How do people actually reach out to you and get guidance if they have any questions?
Yeah, so they can check us out on our website, www.csttax.com.sg, and reach out to me at the contact details below.
Fantastic. So Boon's contact details are provided in the summary below. Feel free to reach out to him, check out their website, csttax.com.sg, or give him a call on the number provided also. Thank you, and see you next time.